Equity valuations are getting richer by the day. With every rally in the market, who knows what next year's returns are going to look like? So, investors are finding that there are fewer and fewer safe spaces for them to invest in the market. If you're also thinking about this, then it's time to look at different asset classes. Fixed income could be the asset class of 2024. There are lots of safe investment options for you to choose from, and if you want to make 2024 the year for fixed income investing, join us on this webinar.
Get rich slowly. I know a lot of you would not agree with the very title of this talk, but let's flip this around to the other extreme, get rich quick. And I'll tell you what people do when they want to get rich quick. They chase investments, they chase valuations, they chase trades, they chase momentum, eventually they chase operators. When your entire investment ecosystem is dominated by manipulation, you are setting yourself up for a spectacular downfall. When you chase things, as I just mentioned, in multiple ways, you are getting into the epicenter of such an ecosystem. By sitting there, you are going to rise in life and become extremely rich. This kind of a thinking is principally driven by blinding greed, nothing else. As an investor, it is not very difficult for you to understand that all forms of manipulation will end badly. I mean, you don't need to really be an expert. Anyone in his senses will realize that manipulation will not sustain. In any market cycle, you have seen manipulation look like it is succeeding only to spectacularly fail. Yet, few years later, we forget the lessons of the last episode only to get into a fresh episode. And typically, the fresh episode is spectacularly bigger than the last episode. In recent months, the SME IPO episode is a classic example of how we have completely forgotten old lessons. I remember seeing private placements for a very long time. The buyer will be anxious to participate and the seller will dictate the terms. Effectively, buyers will beg to be allotted shares, and the companies and their intermediaries, agents, will act pricey. They will allot to different people, and then after allotting those shares, they will want to control who does what with those shares. There will be a secondary trade also which will be controlled by these agents and the companies insiders. Friends, I am not talking about what happened 6 months ago. I am talking about what happened 30 years ago. And cut to the present, the same nonsense happens in a much more evolved society where people are far more educated, aware, and well equipped to separate the good from the bad. Yet, people have allowed things to blur so much that they are completely investing in the grey. I was just looking through some of the recent news clippings of a company which has been falling spectacularly after it did a huge placement involving more than 160 investors. I saw all the news clippings just to understand what has happened in that company. The company barely had any profits until 2 years ago. And then it saw its revenue climb spectacularly. With that, the profits also seemed to climb spectacularly. But I was looking for cash flows and I was very disappointed. As in all companies where revenues grow spectacularly in a very suspicious manner and profits seem to climb like a hockey stick, cash flows never support such moves. So the cash flow will be flat or unconvincing, or companies will show cash flow and also maneuver their books to show that they have made huge asset creation. If you go into that asset creation, you will find that those assets are not as valuable as they are on the books of the company. This again is from the tech boom of 2000, when manipulation, cooking up of books, private placements, rigging of stocks, and then eventually a collapse happened. No lessons learned, absolutely no lessons learned. And the sophistry which we have put in play today to convince gullible high net worth individuals is something shocking. The kind of videos people put on these companies, the kind of threads, the kind of reports are all so sophisticated but entirely fictitious. Now think about all these people who chase these companies to participate in a capital raise at such exorbitant valuations. Chances are that they are going to lose almost all of their capital, if not most of it. And yet, we still have hundreds of such stories waiting to unravel. What was wrong with this? People were trying to get rich quick. If you were willing to wait out such episodes, you would get rich slowly, but your money would never get caught in that rut, only to become zero in value. It's a matter of time. It will be like a slowly descending gas balloon, but be sure that it will come back to the earth. This is the problem of trying to get rich quick. Assume you are trying to get rich slow. You will wait for opportunities which you think are good opportunities in well-run companies with strong cash flows and reasonable growth. Instead, if you try to get rich quick, you will try to chase companies which are apparently showing high growth and high profit with little or no cash flows and having a continuous need for capital. So they will be raising capital continuously, only to be burnt in fooling investors. Friends, I see a lot of merit in getting rich slow, simply because I would not want you, me, or anyone to get stuck in these kind of dubious stories. Because once you have an episode like this, it will take years for you to come back into the market. The capital will be lost permanently, and you have to create fresh capital to get back into the market. Even if a part of your capital is lost permanently, the psychological damage is far more than any of us can imagine. And that is why investors should now learn to get rich slow and not try to get rich quick through dubious means. Thank you for watching this video.